Hello everyone, I'm Chris Kapches, President of Chestnut Real Estate, and today I'm going to give you the market report for the month of June for the Greater Toronto Area. And as I pointed out in the market report that I did last month, at the tail end of May, we saw the market really starting to pick up, and it really picked up steam in the month of June to the point where and I don't mean to be facetious when I say this, but if you were someone who came from some extraterrestrial place and was dropped in the marketplace in Toronto, you would never know that we had just been through 3 months plus of the pandemic. Effectively, the market is where it would be before the pandemic hit us and the lockdown measures and the emergency measures came into place in mid-March. The sales were almost identical to the sales of last year, only a percentage point off. We did 8,700 sales in the month of June. Very close to what we did last year. But what's even more startling is the average sale prices. Average sale price went up to $930,000, over $1 million in Toronto. That $930,000 is the GTA average sale price. And that price also includes all condominium apartments throughout the GTA. So $930,000, which is a 12% increase compared to the average sale price that we had last year, which was only $831,000. So what has prompted this incredible resurgence in the marketplace? Well, a couple of things. One, we had a huge built-up demand prior to mid-March when the pandemic was officially declared and the lockdown measures came into place. And that built-up demand continued right through the early days of the pandemic. And then, of course, when we started loosening up the economy, which started in May and then into the early part of June, all of that pent-up demand came forward, but by that time we'd adjusted to the various protocols for in-person showings. And the next thing you know, we were having 10 and 15 showings on properties, resulting in multiple offers, particularly for semi-detached properties and in some of the central core areas of the city of Toronto. In addition to that, we have historically low interest rates. You get mortgages, 5-year term, 2.3%, 2.4%, 2.5%, depending on the institution and the terms of the mortgage. And then on top of that, I think there's just this I've got to secure a property now mentality that has infused itself into the marketplace. All of those factors combined have just made the marketplace, it's been stimulated to the point where it's very hard to distinguish between June of last year and June of this year. Early indications are that we're going to have a similar month this coming July. For the first few days in July, a look at the data indicates that we're averaging in the city of Toronto about 100 plus sales reported a day, which will probably give us over 3,000 for the month, which in turn would compare to very favorably compared to what we did in July of last year. The one part that is a concern in this marketplace, and it to some extent is also a factor stimulating the market, is the lack of supply. In the month of June, supply increased marginally compared to June of last year by just slightly over 2%, but we find ourselves going into the month of July at almost 30% fewer listings than we had a year ago. That, combined with all the factors that I've just mentioned, is having a tremendous impact in stimulating the market. So I would suspect when I do the market report a month from now for the month of July, I'm going to be giving you information that's not dissimilar to what I'm discussing with you right now. So be prepared for another strong month in July as we had in June, and I suspect that will continue through the remainder of the summer and into the early fall months. Thank you very much. Look forward to the next market report.